Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 18th of November 2023. We're publishing our gold and silver weekly update for the week ending the 17th of November. Gold and silver bounced back last week, and we mentioned the week before when it fell whether was it just profit taking and consolidation before the next big rise? Are we going to see now another rise this coming week or two? Well, to find out, let's take a look. Now first, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who have not as yet joined the channel. Now going back to what happened last week and what we expect to happen this week, gold rose $43 last week, rising from 1938 to 1981. It did hit a high of $1,993, not quite reaching 2,000, and a low of 1932, an overall rise of 2.2%. In sterling terms, gold finished the week at £1,590, that's up £3, and it was unchanged in euro terms at €1,816. Now silver performed much better. It rose $1.47, rising from 22.26 to 23.73. Having hit a high of 24.16 and a low of 21.89, a rise of 6.6%. In sterling terms, it was up 82 pence at £19.07, and in euros, it was up 0.89 euros at 21.77 euros. Gold to silver ratio fell quite a lot, in fact, from 87.1 to 1 to 83.5 to 1. Now, the difference between gold's high and low was $61, the same as the previous week, but the difference between silver's high and low was $2.27, compared with the $1.11 the previous week. Now, this is what we said last week concerning our forecast for this week that has just passed. Our prediction for gold this week is that it will trade between $1,900 and $2,000, which it did comfortably. Our silver forecast will trade between $21.75 and $23, with $21.25 to $23.50 as outliers. Well, silver traded within our forecast until Thursday, but then gained a boost, taking it above the top of our outlier range and closing 23 cents above it. Now, before we look at what happened, addressing other financials, Bitcoin stands at $36,468. That's down $693 on the week, though it has been much higher. Equities were up, and positively so, with the Dow Jones up 664 points at 34,947, the S&P 500 up 99 at 4,514, and the Nasdaq Composite up 327 at 14,125. And even the previously poor old FTSE 100 index, that too is up 144 points at 7,504. Oils were lower, not by much, but Brent crude is down 82 cents at $80.61, and WTI crude is down $1.28 at $75.89. The dollar index weakened quite considerably, primarily because of the CPI data, and that was down 1.94 points on the week at 103.92. In terms of economic data last week, we highlighted last weekend to watch out for CPI on Tuesday and producer price index and retail sales on Wednesday. Well, the data was pretty good as far as the Fed are concerned in its battle over inflation. The CPI data for October came in at 0%, causing the year-over-year figure to fall from 3.7 to 3.2. Core CPI for October came in at 0.2%, lower than the 0.3 expected, and causing the year-over-year figure to fall from 4.1 to 4%. On the face of it, positive inflation data, though a little more of a decline would have been well and truly encouraging. We're still well above the 2% target. The producer price index was down in October, minus 0.5%, compared with plus 0.4% the previous month. And retail sales showed a minus figure, minus 0.1%, compared with a positive 0.9% the previous month, though analysts were hoping for a slightly higher negative figure of minus 0.2%. We live in that topsy-turvy world where we hope people are buying less. Now, as far as this week is concerned, not so much data really. Monday, we have US leading economic indicators for October. Tuesday, existing home sales and the FOMC minutes are published. Wednesday, initial jobless claims and consumer sentiment for November. That's worth a look. Thursday, nothing scheduled as it's Thanksgiving. And Friday, we have the S&P flash services and manufacturing PMIs for November. I'm more interested in the final figures than the flash, but they do give you a guide. So our focus really for this coming week is primarily going to be on the FOMC minutes. The following week, we have more inflation data by way of the PCE index, but we shall have to wait until the 30th of November to see those figures. Now, going back to last week's report, we stated as far as gold and silver were concerned, quote, "We're not confident the rally is as yet over, though we did forecast consolidation for a week or two after recent rises." Analysts are actually giving us a mixed picture for gold moving forward. Some are saying the US is heading into a recession, which they claim is good for gold. Others are saying that technically gold is running out of steam and a trend reversal is possible. The argument to some degree is that the price of gold is really going up because of the weakness of the dollar, more so than its ultimate underlying demand. Our position is that compared with the major economies, the US is slowly but surely winning the battle on inflation. Just a couple of days ago, the governor of the Bank of England indicated that interest rates here may still have to rise because inflation is not falling fast enough. We suspect that the US will be in a much more advanced position to reduce interest rates before its competitor nations. And when this starts to happen, we should indeed see gold and silver benefit from this. And especially if the dollar index falls below 100, which it could very well do in the first quarter of 2024. Now, traditionally, we see a gold rally in November, often moving up to and through the new year and into February of the following year. And with gold already at an elevated level, we should certainly see all-time highs reached either before 2023 is out or in early 24. We did expect silver to strengthen a little after recent falls, but it performed much stronger than anticipated last week. It is, however, finding strong resistance at the $24 level. It can surpass this, and if it does and holds, then the next two major resistances are $25 and $25.50. Our only concern really about silver is that if the US and certainly more likely the Western economies fall into recession, then the industrial demand for silver will fall, counteracting any monetary value gains it may benefit from. Also, figures coming from China, one of the world's largest importers and miners of silver, are not too encouraging at the moment. Add to this, we still have a number of uncertainties in the Middle East and the Russia-Ukraine. And just for note, for next year, we have general elections both in the UK and the United States. So what is our prediction for gold and silver prices this coming week? Well, for gold, we're anticipating that it will trade between $1,950 and $2,025, with $1,925 as a lower outlier and $2,050 as an upper one. Our silver forecast, and this will be all over the place we suspect this week, is that it will trade between $23 and $24.50, with $22.25 to $25 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you for listening. Please give this video a thumbs up, subscribe, press the bell sign. If you haven't done so, pop on over to our Finances Do Matter channel and subscribe to that, links below. And all that remains is for us to wish you a safe, enjoyable weekend. And as always, a prosperous week ahead.